Hello, Matt Blocki with EWA. Today we are talking through 10 tips for 2023 and how to maximize your financial plan. Tip number 2 for maximizing your plan in 2023 is maximize your Roth IRA. So in 2022, the maximum that you could put into a Roth IRA was $6,000 if you're under the age of 50. That has gone up to $6,500. So pretty significant increase. Would definitely make a big difference in the long term. What did not change is the catch-up contribution. So if you're over the age of 50, the additional you can put in is still $1,000. So in 2022, it was $6,000 or over 50, $7,000. In 2023, it's $6,500 or over 50, $7,500. Many ways to get money into a Roth environment. And this video specifically, tip number 1 was around 401ks, and inside of a 401k, you can do a Roth 401k in the 402g or a mega backdoor Roth in the after-tax component. We can also convert into a Roth by paying taxes on something that's already pre-tax. But this tip number 2 is just talking about the good old-fashioned contribution into a Roth IRA. That's the limit that can go in per year. And one thing to note is that the limits for income actually went up as well. So if you make below $218,000 as a household in 2023, you and your spouse can directly contribute into a Roth IRA. If you make above 218, you start getting phased out. And once you're above 228, you're completely out, meaning you can no longer contribute into a Roth IRA directly. If you're right in the middle here, at $223,000, that means you can contribute half of the maximum into the Roth IRA. You could contribute $3,250. So again, below 218, the full amount. Halfway in between there, you contribute half the amount. If you're above 228, you contribute zero. Now the exception to this is if we do what's called a backdoor Roth IRA. And a backdoor Roth IRA simply means that we don't have to worry about income limitations anymore because anyone can contribute into a traditional IRA. Now, tip number 3, we're going to talk about contributing to a traditional IRA, whether it's a deduction or not, but you could be making $1 or $1 million. Everyone's eligible to contribute to a traditional IRA. The same contribution limits apply. The question is, do you get a tax deduction? And in the backdoor Roth, we don't want to take a tax deduction. It'll be an after-tax contribution into a traditional IRA, and then assuming that you have no aggregation, the $6,500 contribution in 2023, the next day we would convert that to a Roth IRA, fill out Form 8606 on our tax return, and assuming there was no growth in that one-day turnaround, there'd be no tax when we go from the traditional to the Roth IRA. Some extra tax reporting, but a way that we can get around those income limitations and end up getting your contribution to the Roth IRA. We did a separate video which we'll reference, 5 things to know about a backdoor Roth IRA. There's aggregation issues, so we have to be careful if you have an existing balance in a traditional IRA that's pre-tax. There's aggregation when we pull that money over. So this example is assuming that you have no pre-tax IRA money. Everything's been rolled to a pre-tax 401k, which operates in a totally separate universe and which would enable you to do a clean backdoor Roth. So something we recommend everyone that's actively working to contribute into the Roth IRA. Important to note, if you're retired and just have passive income, you cannot contribute to Roth IRA. You have to have active income to contribute to the Roth. If you have a child under the age of 18, they have to earn $6,500 to be able to contribute $6,500. You can't just gift them money directly into a Roth. They have to have the earned income on their tax return to then show it. If you run a business, we can show you ways to avoid federal tax on the first. It's above $12,000, you can pay your child tax-free. So if they're able to do some duties inside your business, we can not only save taxes by paying them that money, but we can direct that money to the Roth IRA to help them start planning for the future at a very young age.